Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks for weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles, my Twitter feed, and gregschnell.com. Well, folks, I'm back from the Panama Canal trip, and that was pretty outstanding, actually. Quite enjoyed it, and finally having a little bit of time in my home office to get all caught up and readjusted. And we've had a bit of a market pullback. So we've got a few things to cover off today. Looking forward to that. Let's get into the agenda. So first of all, I've got my friend on the line this week with Jeff Hirsch of StockTraders Almanac. And Jeff is going to give us an update on the year end and a little bit about his product. And the market over the last couple of days literally went all the way back to the beginning of November. So we're sitting, I think it was kind of November 4th, the close of November 1st, and we dipped all the way down to that level. And now we're trying to bounce back up. And I think we're trying to hit the bottom of the 20-day moving average. So we're going to cover that off right away. And then I'm going to jump into a global review now that we've got month-end November in the books and just kind of how the charts look around the world. I think that's pretty important. They have not been as bullish as the U.S., and so I want to cover that off a little bit. And then we want to watch OPEC closely this week. I know for people who hate the oil business, that won't matter much, but I got to tell you, we're sitting on the fine edge of the wedge here, and I was expecting one more sentence to come up there, so that's why I hit back and forth. But what's happening with the oil stocks is they're commodity related. They've sold off immensely. They're sitting at prices below 2016, where oil was at $25. Crude is at 56 or 57. So we're almost double the crude price, and the stocks in general are down below that. So commodities are really nice to play for big swings, so from low to high, and then you sell them. They're not like Coupa software or something where you want to see them run for years and years. That's typically not how commodity stocks trade. So anyway, with all of that, we're going to jump into the start of the show here, and I just want to cover off where we're at. This is just a 10-minute view for the last 10 days, and what you see here is the S&P 500 just pushing back up here to kind of where we broke down from the lows of Monday. And then we rallied into the close, fell on Tuesday, and now we're rallying back up, and we're getting back into this zone of resistance. So we're going to see here if we end up making some sort of a topping structure, or if we can actually get out of bed and start to make some productive moves here. S&P 500, again, we had this big gap, and now we filled the gap. The real question is, do we just roll over? The momentum indicators are kind of stretched, so even if it took a couple of weeks to pull back and then start to take off again, I wouldn't be disappointed. I still expect higher highs. I don't have any clues telling me not to expect that, so I'm still bullish on the bigger picture. Some of the sectors that are going to take off in the new year, Jeff will give us an update on that right away here. But I think more importantly, there's some real opportunities. Gold started to perk up. Might be an interesting trade. Oil, again, when it's sold off this bad and the price is starting to move higher, if oil gets through $58 on the back of OPEC, I think we've got some room to the upside in the oil stocks. Could make 15-20% very quickly because they're so out of favor and have been used for tax loss selling. Anyway, that kind of narrows the scope of today. I think the bigger issue is, as I mentioned before, the China trade deal still hasn't been finalized. Shanghai's trading terrible, which bothers me. So I continue to watch both sides of the story, and I'm not seeing the price action in China match the price action in America, and I'm trying to figure out why not. But with that, let's roll it into Jeff. Mr. Hirsch, are you there?
I think so. How are you?
Hey, I'm very good. So we have Jeff sitting on the East Coast, and I'm sitting in Calgary. And again, after I got back from Panama, it was so cold here. It makes you wonder why you live up here. But there is nothing prettier than a mountain scene where you go skating on the lake and downhill skiing. So there are some benefits, but I got to tell you, the first day back is a shock. What are things like in New York?
Well, we had a nice little snowstorm here, a little bit further north of where I'm at, on the Hudson and Nyack. There was about 1.5 feet, a little bit further upstate, but we had the usual icy mix of everything and crusty stuff. So we're in winter.
Yeah, you're doing the same as me, asking why you live there. Anyway, hey Jeff, give us an update on what you got going on.
Well, we got the 2020 Almanac out. It's the 53rd annual edition. It's the election year edition. Got some interesting election year features in there. One of the things that I'm talking about in the my outlook is this incumbent president, sitting president running for re-election, which is more bullish than I had expected being for 2020 election year with a second term unorthodox president running for unorthodox president running for a second term. But the Dow on average with sitting presidents running for re-election up 10.1%. S&P's in those years. S&P's a little bit more, about 12. All election years 5.3%, and years when it's an open field where there's no actual president in office running for re-election, minus 1.6%. So we've got that going for us, which is nice. And then just looking here at year end, you're still bullish, as you were saying, and seasonally and 4-year cycle wise, that is also the case after what's normally a dull period in the beginning of December with tax loss selling kicking in and any other news flow items that we're having an impact. Stocks tend to take off mid-December and post a lot of times a new high in the pre-election year at the end of December. So there's some charts that we've been carrying on the newsletter service that you're looking at there, and it's looking like this pause is expected, and then we'll look for a Santa Claus rally to bring us to a new high at the end of the year.
Yeah, and I think it's given us the chance to, just November was a gentle move up, kind of crawling higher every day, and we had, just a nice taper to the trend. And so this little bit of a pullback here gives you a chance to see which stocks are going to hold up. I think after the U.S. Thanksgiving and Cyber Monday and Black Friday and all of that kind of stuff, seeing which retail stocks are holding up. And what's your seasonality like for consumer discretionary or retail heading into the early part of next year?
I mean, it's not just early part of next year. That whole seasonal bullish period for consumer discretionary and retail kicks off in October with a whole basket of sector seasonalities. During the worst 6 months, the sell in May period, we were in staples and utilities and healthcare and some of the other and bonds, of course, some of the sectors that performed better during those weak summer months. But then, as people forget, if you're going to sell in May, you got to buy in October and get yourself sober. So if you look at the table on page 92 of the Almanac, if anyone's got one, or if they do get one, you see the sector seasonality table with that big chunk of these sectors hitting their seasonal bullish period from October to some of it's December, January, March, and into May. So this is the sweet spot for sector seasonality, and discretionary and retail is in that.
Yeah, I must admit, I think I just had so many groups trying to go positive here. The one thing I'm having, so in January we had lots of groups accelerate, industry groups accelerate, and then on each successive high we've had less and less participate. So still not at the concerning level, but I'm a little surprised at how few industry groups actually got into positive territory in terms of momentum and really started to move up the ladder. So that is making me wonder a little bit, but I still think that the retail setup is there. I'd like to see the commodities start to participate a lot more on that. How about you?
I'd like to see them participate as well, but we use the historical, seasonal, and cyclical outlook to get into these things ahead of what's historically been their sweet spots. In addition to using our technical analysis to time and get in there, but I'd like to see some further support. I'd like to see some more breadth in the overall market in general. And when it comes to some of the commodities, we have copper is one of our favorite seasonal trades. We'd like to trade Southern Copper and Freeport. We used to trade Global Brass, but they got taken private. And that tends to bottom in December when the construction industry is at its low point. So you got a copper seasonal trade coming up, and then oil. The stocks tend to bottom also in December, but commodity wise, along with natural gas, we're looking for a low point more in the February, or somewhere in that December to February period. So those are the commodities that are on my radar. Stock wise, the one thing I would like people to be aware of is this January effect, which we've shown really starts in mid-December. And in conjunction with that Santa Claus rally that we're famous for, that's the last 5 days of the year, first to the new year, we have a trade we call the only free lunch on Wall Street, which picks bargain stocks making new 52-week lows on triple witching Friday or quad witching if you need to go there in December. Last year it was just blew it away because we had that nice correction. This year will probably be a little bit less, but we're expecting to find some interesting stocks on there. And that's something we put out to the subscribers to our newsletter service at StockTradersAlmanac.com. So cool. That's the free lunch menu.
So Jeff's got a blog here, and one of the things that's coming up on his blog, just so you know, is a free webinar about Santa Claus rally that he just mentioned, and it's going to show up this afternoon at 1 p.m. Eastern. So as you can imagine, time's not too far from here, but enough time to maybe grab something quick and then get back for Jeff's webinar. So anyway, you can go to his website and on the blog tab, run down until you see this header for the blog article, and the registration is free. There's no charge to go there. And anyway, he's going to talk about the Santa Claus rally of 2019. So try and squeeze that into your calendar, and maybe there's something there for you. And then swing back over to StockCharts TV and pick up Dave Keller with the final bar. So lots going on. Hey, Jeff, thanks for taking the time to share that with us. Hopefully that'll send a few people over to your webinar. There's lots of good things. We also have a promotion at StockCharts, and the promotion, if you go to store.stockcharts.com, is the StockTraders Almanac, and it's on sale in the store for the month, or well, I don't know if it's the whole month, but over the next week or so for $34.99 instead of $50. So great price on the.
I think that's better than Amazon's price too.
We're trying to be aggressive in that bookstore, and
so I would direct everyone to go buy the book from you guys if they just want the book. But if they're looking for more of our seasonal trading advice and our newsletter, the book comes free with that. But if you just want a copy of the book, get it from StockCharts. You want to check out what we do in the newsletter, go over to either check out my webinar or come to StockTradersAlmanac.com or shoot me an email if you need something.
That sounds good. Hey, Jeff, thanks. We'll let you get on with your day, and we appreciate you coming on. Have a good holiday season if I don't talk to you before then, but we'll catch up in the new year, I'm sure. And with that, we're going to break out to a commercial, and when we come back, I'm going to roll through how the rest of the world looks now that we're at the end of November. Thanks, everybody.
Thanks.
Okay, so we're going to cover off a few of the charts that I think will define how the rest of the global rally goes here. One of the big issues I like to watch is the S&P 500 sells worldwide, and obviously, if the rest of the world is doing okay, it's pretty bullish. So when we start to work through the global charts, the picture isn't as bright as it was for the US market, where they made highs every week in November. What we see in the rest of the world, this Brazil chart still looks good, hitting new highs even this week. Not quite intra-week highs, but so far closing highs, hardly had any pullback. So that's a promising sign on that one. When we get into Russia, we can see it's been tapering off for the last 4 weeks, and it looks like it's making a divergent high here with the lower high on the momentum indicator and a higher high in price. There is a big trend here of relative outperformance by the Russell compared to the S&P 500. I would just say that trend is starting to become threatened, so we need to watch that and just see if that's going to roll over. But that would be a little bit more of a commodity clue than we would otherwise get. Australia looked like it was going to test this breakout level well, call it mid-November, and then it immediately reversed back down. Then it reversed back up and reversed back down. So looking like some serious indecision going on in Australia. We've already got kind of a big lower high here tilting down. So we'll watch to see how we end the week, because obviously a weekly chart, the close is not confirmed, and all of this data, all of the signaling data is based on the close. So what we want to watch for here is, does Australia, it's kind of broken this uptrend. If you wanted to, we could put a more shallow line on here, but I still think the issue for Australia is how are we going to, as the commodity supplier for Asia, it should be breaking out if China's going to kind of get its wheels back under it and start to turn up. If the rest of the world is going to start to run, I would expect Australia to do pretty well. This lower high in the PPO is one of the big signatures that it's important to watch for as we get to this signal line and it turns down here. From my work, what I find is on the weekly charts, the daily charts are pretty whippy, but the weekly charts really do help you see a trend. And when we see something like this signature here where we get a price high and then we come and we test the high with a lower momentum and then we immediately give it back up, that's a very worrying sign. So we still have to wait for the end of this week to confirm that on the Australian market. But first of all, we had 2 wide-ranging weeks, so that kind of says indecision, especially when they're chopping back and forth. And then the next component of that is momentum rolling over at a lower level, so we just need to be aware of that. When we get to the Nikkei, I want to show you how that double topping structure looked as well. Okay, here's the Canadian market. And what we see here on the Canadian market is things actually look pretty good. We're just kind of oscillating along here sideways, and we can do that. That's just fine. We did break out to a higher high and then come back to test that. So if we're in a big bull market here, we're going to come down, bounce out of here, and then head higher. And maybe that's on the back of oil and gas for a change. But we haven't seen that in the Canadian market. There's been a few moves up, but I noticed Royal Bank and BMO didn't respond very well to their earnings announcements. Shanghai Composite, this is the one that bothers me a little bit. When you look at it on this weekly chart, PPO is trying to bounce right here at 0, and that would be very important. We do not want this thing to start accelerating lower. And as we're trying to finish up this trade talk, I think the bigger issue, again, is why is this chart not as optimistic as the US is that a trade deal will get done? Anyway, we don't have the answer for that, but we'll keep watching. A bounce right here like we had back in the August timeframe would be very bullish, and we want to see that. We do not want to see this chart continue to drift lower. So it's at a precarious place right now, and what we want to watch for is, can it finally turn higher and get some sudden momentum? So here's the Hang Seng, and I think the problem here is we're rolling over below 0. It doesn't have to finish rolling over. It could start to turn up again if we could get some stability there. But the rallies that are going on in Hong Kong have obviously slowed their GDP. I think I saw 2 percentage points taken off GDP for the Hong Kong region. And now, in order for this for this chart to start turning back up, the big thing that we want to watch for, obviously, is momentum to start improving. So a turn up right here would make for a higher low, and that would be nice to see if we could kind of accelerate out of here. Looking at the Kospi, so this is South Korea, and South Korea again has a lot of the tech stuff, semiconductors, things like that. This is also rolling right at 0. And so what we want to see, the histograms on its 4th week of lower highs here. 3 weeks of lower highs coming off the high. And what we want to watch for now is that it suddenly turns up. So you can see back in here, it finally rolled over and that wasn't bullish. And here we have the same condition setting up. So again, Japan, Hong Kong trying to do this. Shanghai's just going below zero. The Kospi's below zero. So these are all at inflection points. Doesn't mean they can't turn back up, but they really need to kind of get their mojo pretty soon here if this is not going to start another Asian slide. Now here's the Nikkei, and the point I wanted to make, first of all, let's go back and readdress the topping structure. So here you have a high, here you have another high, and on this second high you have a lot lower, and then it rolls over and goes below zero. That's a pretty important factor. So even being aware early October that this chart was topping last year, and again, the whole world topped at the same time, so this was a pretty nice place to be aware of. Anyway, it pulled back all the way down with the December low. The whole world kind of mapped that pattern. And now we're sitting up here and the PPO looks very good. One of the concerns we've had is we've spent about 5 weeks here trying to get through these prior highs. So if this was going to top out, again, anytime you test a prior high or break through a prior high, you want to see it hold. And an example of that would be the Russell last week broke out to a new high. And now this week, we want to make sure it holds that high. So always an important place to be aware of when you're testing the prior high, see how much resistance is there. This is Indonesia, and again, downward trend here. Nothing major, but if we could start to break out of this downward slide, that would be very bullish. And so never want to get too pessimistic, but having this chart all of a sudden turn up would be a big help to the picture. India, this chart just continues to push higher. Very nice. It's been breaking out above the June highs here, spent all of November just grinding higher as opposed to moving higher. What we want to watch for here is, does it have enough thrust to keep going? There is a trend line down here on momentum where we're starting to get a little bit weaker here as it rolls over. I don't want to worry about it too much yet. It's got the best demographics going. Germany pretty much let go after trying to test prior highs. So we're at 4-week lows. Rolling over here on momentum. So that's concerning if Europe's going to start to roll back over again. And, we've got an uptrend here in momentum. That trend line, if it starts to break, that would be my first clue that something's changing. All of a sudden, the uptrend we had in momentum is starting to wane, and we need to be more cautious on Europe. Looking in on France, that's an ugly candle. That's for this week so far, a couple of days. And as you can tell, we gave up all of November and part of October's gains in France. And our momentum indicator was topping out kind of at the previous level. Normally, I would just say it's oscillating along here. That's fine. We do have some big drops here, and it recovered within a couple of weeks. So maybe that's what France is doing again. But there's a nice uptrend here that is starting to look like it's in jeopardy. Rolling into England, what we see here is the PPO is rolling over right at zero, much like those Asian markets. And I think we all know that there's an election coming in the UK. And I think the date of that is December 21. But as this comes forward, the big thing here is, are we going to start breaking through this upslope? We've already broke through one now. It looks like a lower, flatter level. But our momentum indicator is at a risky spot where we're almost dropping below zero. And Martin Pring likes to explain it as spring is rising below zero, summer is rising above zero, fall is falling above zero, and then winter is falling below zero. So we're right on the edge of this winter season here where this would probably be not that great. So to see all of Europe and all of Asia starting to give it back here is a bit concerning. Looking at Italy, not really, well, it's a significant market in terms of number of people, 60 million people there. You can see we were testing prior highs again, and we're rolling over. And again, there's an upsloping trend line here. If this is going to start to break, that would add more caution to my work. Spain, this chart's just been chop all year. It hasn't really, when you consider the US is up 25%, this chart just hasn't been able to get anything going for it. There's a giant downtrend here, and I would just suggest we're up against that downtrend, rolling over right near zero. Again, all of these charts look ugly because we've had 2 big down days. Now the real question will be, how do they finish the week? Looking at the S&P, we're up in this top corner again. We came down and tested the early November price action, and we're trying to bounce out of here. If I put a 20-day moving average on the charts, we're right around that level. So what we want to watch for is, does that become resistance, and all of a sudden we start to roll away? So just keep that in mind. And again, if we put an uptrend line on here, this has been a year-long uptrend. That's pretty significant rally time. Doesn't mean it has to end, but as much as I'm optimistic, I still want to keep checking my work to see Asia and Europe kind of struggling right at an important inflection point on the charts. Adds a lot more caution to this equation. Okay, here we are for the Nasdaq 100, and what we see on the Nasdaq is, momentum RSI got all the way up to 70 here. That's very bullish. Even a pullback to 50 would still be fine. So that would be a drop down to the 40-week moving average, but significant drop here. That would drop it all the way down to 77.50 from 8,500. That'd be like a 10% correction. So if we're going to get that kind of a move, that would be important. I keep watching. I think that's it for, I've got a couple other charts not related to countries. Here's West Texas. And again, we're sitting in here. I think crude's up almost 4% today, but we're up around 57.50. And so with that, watching to see if crude oil can keep this uptrend going, or is it going to start to flail here? And I don't like the momentum rolling over at zero. This is a very cautionary place on the chart. So if it can start to turn higher, that's pretty important. If it fails this week at OPEC, that would probably be the big signal where we don't have enough momentum to get back into the summer period, and we're just going to go straight to winter. And a real problem, I think. So anyway, I don't like it when crude oil is a lot weaker than the market, so we want to watch that. Here's gold. Had a nice price move yesterday. It's gently pulling back today. I think, I can't remember if, let me just check my other charts here. Yeah, gold's down a little bit today, probably half of the gap up it made yesterday. So it's sitting here trying to get back through the middle of the Bollinger Bands, the 20-week moving average. But I looked through stocks hitting new highs this morning on the predefined scans page. Maybe I should just show you where that is. Actually, let's go over here and do that. So under charts and tools, you can go here on this other side, and there's advanced scans, etc. But down here is predefined scans, and you can just go see new 52-week highs. And when you click on this, for yesterday, I think there was, between the Nasdaq and the NYSE, there were 7 gold stocks hitting new highs. And when you consider gold isn't at a new high, that's pretty impressive, right? So these gold stocks are behaving pretty well in this environment. Lastly, let's look at the US dollar on a weekly basis. Slow grinding trend higher. Nothing wrong with that trend. We're probably going to test the 40-week moving average here. I know we had a push down in the US dollar this morning, so we'll see where that ends up. But what's my momentum indicator starting to say? And again, you have to wait till Friday's close. We're getting a preliminary look here, and it looks like it wants to roll down again. So as this US dollar keeps getting a little bit weaker and a little bit weaker and a little bit weaker now, we'll just see if it's got the strength. There's a big uptrend line here. If I open this chart up a little bit, let's just go to 4 years. What you see is we've got an uptrend in momentum that looks like it's about to be tested. And if this starts to break down here, that would kind of confirm US dollar going lower. So we're not out of the woods on the US dollar, but again, that 97.50 layer has just played such an important part all year. I thought when we finally broke through it, we were going to take off to the upside. That didn't happen. And here we are kind of rolling over again. So we'll keep watching. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern Time, 7:30 a.m. Pacific Time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows. And for more information on Market Vision 2020, the conference coming up in January, please check the latest blog in DITC. Thanks, everybody. Bye-bye.